Bloomberg Audio Studios. Podcasts, radio, news.
Rebecca Patterson here for a good conversation to start the morning off. And of course, we devolved that to a dollar discussion and on from there. She's focused on crypto. We'll get to that in a moment. Her effort at the Council on Foreign Relations is noticed. I can't say enough about the new edition of Foreign Affairs magazine. You'll see it in the next couple days or so. It is just absolutely extraordinary. I've got to go to dollar here right now. Is dollar hegemony, is it threatened by all that's going on in Washington?
Longer term, yes. I think there is a threat to the dollar from some of these policies. You know, the U.S. relies on demand for treasuries, and the idea that the treasury is going to be the biggest bond market in the world, liquid, safe, always transactional. And if you're putting tariffs on allies as well as adversaries, over time, they may want to diversify away from those assets. Now, there aren't a lot of places for them to go, but one place we've seen clearly over the last couple of years is gold. And you are seeing data showing China reducing its treasury holdings. Obviously, we know Russia did over the last several years. So the policies we're putting forward today, I think, do create some risk. Now, there's new sources of demand that we can talk about when we get to crypto. But when we think about foreign holdings of U.S. bonds, I think that is a source of risk that could push yields higher and weigh on growth.
Do you get a sense that this White House, this economic team at the White House, do they have a sense that, generally speaking, markets do not like uncertainty, whether it's uncertainty of policy, uncertainty of rhetoric? Is that something that has an audience, do you think, down there in D.C., or is it just kind of overshadowed by this is a president that wants to do what he wants to do?
President Trump has said in the last few weeks that he knows there might be some short-term pain to get to these long-term goals. I think there's probably a degree of pain reflected in the markets that would get his and his team's attention and maybe cause them to take a step back, at least temporarily. But I don't honestly know if today, looking at the sell-off we saw in the stock market last week and the continued softness we're seeing this week, registers.
I look at the follow-through of all this, and I guess I go back, like a lot of people, to real GDP. The fact is, Atlanta GDP now, a snapshot of where we are right now, is coming in with a vengeance. Mm-hmm. Do you sense a momentum to make some news here on a, what's today, Tuesday?
Tuesday.
Sure. On a Tuesday morning.
Bow tie Tuesday.
Do we have
Taco
bow tie
Tuesday.
Yes, I'm wearing a bow tie.
Bow tie's back.
I got the stitches out from where the damn dog bit me. Just as simple as I can, are we heading towards 2.5% or lower real GDP?
Well, here's what's so interesting, Tom. Last year GDP was much stronger than expected. We've gone into this year strong. We've seen that in the most recent earnings season, but that's all backward looking. What drives the economy is confidence and incomes. So people still have incomes. The job market's still strong outside of certain DC agencies. I don't mean to be snarky about that. But confidence is where we're seeing some question marks. The other piece that's changing is economic surprises. A lot of economists revised up their expectations immediately after the election. What we've seen over the last several weeks now is data coming in below expectations, disappointing, and that indicator coming down. Now, I want to be careful on causation, but it's correlating beautifully with the 10-year yield. So the market's pricing in 2 Fed cuts again. The 10-year yield is getting lower. All of that is coming hand in hand with both worries about the forward-looking economic outlook and disappointments.
Yeah. To 4 digits, Paul. Patterson's in the room, so we got to, go to 4 decimal points.
Absolutely.
1.8994 on the 10-year real yield. That's an Ian Lingen number.
Top go. These are the top stories on the Bloomberg terminal, Tom. Guess what's number one here? Your favorite, Bitcoin. Bitcoin slides below 90,000 as crypto sell-off gathers steam. To me, I know you're recently out with a piece in CFR on the crypto. I kind of just view Bitcoin as just a sense of risk appetite out there in the marketplace. That's it. Are we saying risk off a little bit here?
Yeah, I mean, Bitcoin correlates very well with tech stocks, which is not surprising. At the end of the day, cryptocurrencies are a form of fintech. So when you see the Mag 7 come down, it's not shocking to me to see Bitcoin come down. If that sell-off, if NVIDIA disappoints tomorrow,
oh boy.
I think you see Bitcoin going down further. But it gets me back to our Treasury point earlier. President Trump, in one of his executive orders, is very explicitly supporting the development of digital assets and crypto, and specifically stablecoin. And I want to highlight this because to the degree stablecoins gather momentum, gather assets, they're backed by, the dollar ones are backed by treasuries and other cash-like assets. This is a source of demand for treasuries that I think Treasury Secretary Bessent is keeping a close eye on. Tether, just has something like $113 billion worth of Treasury and Treasury-like securities today.
Rebecca Patterson with us, of course, on your morning commute, and also on YouTube. Subscribe to Bloomberg Podcast, growing each and every day. Can't say enough about YouTube Premium. I'm reading the book, Mark Bertrand's book on YouTube, and YouTube Premium.
Sure.
I'm glad I did. It's sort of slick, and all that. Let's go back to J.P. Morgan and Bessemer's Trust. Is there an underlying to Bitcoin? Please inform me. Where's the underlying to support a theory of Bitcoin?
I mean, Bitcoin itself, to me anyway, remains a speculative asset. And I'm not saying that lightly. The Bank for International Settlements did a really detailed report about a year and a half ago. It's worth reading, talking about the development of crypto. And it highlights, based on a global survey, a very detailed global survey, that the bulk of owners of Bitcoin today are young men under the age of 35, retail investors, and it's a momentum trade.
Yeah, I should say worldwide, folks, and you see me say this on social, the leadership here is Raphael Auer, A-U-E-R, at the Bank of International Settlements. He has the best, whatever your belief on Bitcoin. I mean, Matt Miller should read it.
Yes, exactly.
If you can find his passcode to cash out.
Rebecca, is this administration, I mean, I think President Trump at some point, whether it's campaign or whatever, described himself as a crypto president. Is this a crypto presidency? Is this something where the next 4 years we can see the U.S. regulatory framework support crypto in this country?
100%. I think over the next 6-12 months, we will see regulatory clarity, which is going to allow more integration between crypto assets and the traditional banking system. And I think it probably will get more broad adoption. So it won't just be the young men, it will be more types of investors. And that's good for crypto in that it'll reduce volatility by having more liquidity. The risk one needs to watch is that as it gets bigger and more integrated, it becomes a source of systemic risk. If you have a hack like we did this past week in Bybit, right? $1.5 billion hack of a cold wallet, which is supposed to be safe.
Cold wallet.
Right, a cold wallet is
That's
offline.
Dad's wallet after the trip to Sephora.
But if that happened in the United States, we would have contagion, and that it's not just going to be Silicon Valley Bank; it would be broader. So that's the thing one needs to watch out for. You can have regulation to give them the ability to grow and innovate. You still have to have a few consumer guardrails there.
Our listeners and viewers know where I am on this, and I think Ms. Patterson knows where I am on this. So let's cut to the chase. First thing I did this morning is from peak to where we are now. BitDog is down 20%. That's not a currency. We've got all sorts of IRA, ETF, Eric Balchunas, BlackRock, this, that, and the other doing it. What should we say to those people if we pop down another 10%? I mean, horrific bear markets in the equity market are negative 35%. If we get that in Bitcoin and we're now letting everybody have Bitcoin, what's going to be the outcome?
Well, again, my concern, I think to the degree digital assets encourage more financial innovation in the United States, that's great, right? Our financial system is creative and broad and deep, and that helps the U.S. economy. What we need to be mindful of is that the pool of people today, not in the future, but today, who are trading Bitcoin and these currencies aren't necessarily aware of how to save for retirement in a safe, methodical way. This is not an easy path to retirement riches. And if they lose their money, they have less ability to buy a home, to invest for the longer term. So understanding the volatility of what they're buying, that's I hope that these crypto companies do a lot more education going forward to help these people invest in these assets wisely. Right now, I don't see a lot of evidence of that.
Paul, out on YouTube live chat. Thank you. The live chat can be very smart. Subscribe to Bloomberg Podcasts. This guy, one word, tulips.
One of the things
Thank you for that.
Is the regulatory environment. Like in the last administration, the Biden administration, Gary Gensler, I expected him, and I think a lot of people did, that A, he understood crypto, and B, he was going to take a forceful hand in kind of pushing the regulatory framework forward, which most participants are asking for.
Yes.
Yet he did not really. What do we know about this administration, the Trump administration?
Well, in the last administration, there was some debate, fight, whatever word you want to use, between the different regulatory agencies on who would be the lead on digital assets. I think in this administration, we're likely to see a lighter touch, probably led by the CFTC rather than the SEC. I think we'll get some legislation from Congress through probably in the next few months, which will also create a clear path. And these companies need it. They deserve it, right? They need to know the rules of the road, and the banks and other asset managers need to know the rules of the road. So I do think this administration is going to be incredibly helpful on that front. Again, my hope and my ask, if I could be there in the White House today, would be, please don't forget some consumer protection, some consumer guardrails.
Do you have in your head a price of Bitcoin south where everybody starts wringing their hands? I mean, we're at 89,000. Is it 80? Is it 50? I mean, I have no idea.
So my worst case scenario, a realistic worst case scenario, would be that we get some disappointment out of one of the big tech companies, NVIDIA, whoever it is, it doesn't matter. And we get more of a concerted sell-off. Maybe in response to tariffs, China put some holds on U.S. tech companies acting in China, those sorts of maneuvers. You get a bigger sell-off in tech, which is not impossible given valuations, given ownership, and that contagion pulls down cryptocurrencies in a meaningful way because these investors own crypto and they own meme stocks and they own a lot of tech. And so they get hit on both fronts. That could get some momentum and pull down the broader market. I don't know if anyone buys that dip because they just need to be covering their losses at that point.
Well, again, and the retailization of this is where I have my radar up. Rebecca, thank you so much.